Hello everyone, I am Osima Biswal. Today I will discuss about meaning of cost and money cost, accounting cost or explicit cost, implicit cost, economic cost. If you like my video, please subscribe to my channel Economic Tech. Okay. What do we mean by cost? Every firm makes use of factors of production. Every firm makes use of factors of production, that is land, labor, capital and raw material to produce goods. These are called inputs. Okay, the sum of money spent on these inputs is called cost of production. The sum of money spent on these inputs, that means land, labor, capital and raw materials, is called cost of production. Okay, cost is the sum of all the payments to the factors and non-factor inputs of production engaged in the production of that commodity. Okay, then I will tell about what do we mean by money cost. What do we mean by money cost? Okay, money cost refers to the total amount of money spent in producing a certain amount of output of a commodity. Money cost refers to the total amount of money spent in producing a certain amount of output of a commodity. It is the cash payment made to the factor owners. Okay, it is the cash payment made to the factor owners. This includes rent on land, wages to the workers, interest on capital, payment for raw materials and fuel, power, tax and other payments made by the firm. Okay, then I will tell about what do we mean by accounting cost or explicit cost. Okay, accounting costs are those monetary payments made by the producer or entrepreneur while hiring factor inputs or buying machine and raw materials. All such payments are made towards the factor services hired or bought from outside. Okay, these costs enter into the records by the accountant. Okay, they are known as explicit cost. He may use his own capital or can borrow. He may use the own building or can get on rent. He may manage himself or arrange a salaried manager. Okay, so these are all about accounting cost or explicit cost. Then I will discuss about what do we mean by implicit costs. Implicit costs refers to the normal return on the factors supplied by the entrepreneur himself. Implicit cost refers to the normal return on the factors supplied by the entrepreneur himself. They are normal return on money capital invested by the entrepreneur himself, reward for his services and the like. These are implicit cost or imputed costs which are added to the accounting cost in order to estimate economic costs. Okay, for example, interest on capital used in each firm from own funds, salary for his own services, rent of own land, etc. If these factors were not owned and used by the entrepreneur in his own firm, he would have to pay. So these costs should also be included in total cost of production. These costs are also known as non-expenditure costs. Implicit costs are also called non-expenditure costs. Okay, these costs should be included in money costs. Okay, then I will discuss about economic costs. Okay, economic costs include both accounting or explicit costs and implicit cost. Economic cost include both accounting or explicit cost and implicit costs. Okay, it consists of all such payments to the factors, services and raw materials bought or hired from outside and supplied by the entrepreneur himself. So this is all about money cost, accounting cost or explicit cost, implicit cost and economic costs. Thanks for watching.